Hello, everyone, and welcome to the ML podcast. In this episode, we are honored to welcome David Wolfin, CEO of one of the best performing silver companies, Avino Silver, to discuss David's background, the silver setup, and of course, Avino Silver. This video will be divided into three parts. So firstly, a short introduction of what me and David cover in our discussion. Secondly, the full video discussion with me, David, and my colleague Frederick. In the third part, me and Frederick discuss our main takeaways from our conversation with David in Swedish, just to summarize our thoughts for our Swedish audience regarding Avino Silver as an investment case. The risks with Avino Silver and the opportunities that we see, but also our target going forward. In the commodity sector, timing is as important or maybe even more important than time in the market. And that's where ML has a clear edge. The third part will be exclusive for our investors in our paid ML community and will not be shown in Spotify. So, a short introduction. In this video, we talk about David's background, how he found his way to the silver space and why he believes that silver will move higher in the coming years. But of course, also Avino Silver's and the plans going forward. But before we move forward to the discussion with David, a clear disclaimer. Nothing mentioned in this video is financial advice and are only uploaded for educational purposes. I am a shareholder of Avino Silver at the date of recording. So, David, first of all, thank you for joining us at the ML podcast today. It was a real pleasure to meet you at PDAC in Toronto and also in Stockholm back in October. We truly appreciated the conversation and we look forward to seeing you again soon, and hopefully you enjoyed our silver coin gift.
Have it right here.
Nice, looking good.
Thank you. It's a pleasure to be here.
Thank you very much. And at ML, we have followed Avino for 3-4 years and are long-time shareholders. What makes the company especially interesting to us is that it combines three things we think matter a lot in this market. So silver-focused production, a clear path of growth and development, and also a strong management team. So today I'd like to structure the conversation in three parts. Firstly, your background and leadership. Secondly, your broader view on silver and the macro environment. And thirdly, the main part of the discussion, Avino Silver itself, the asset base, the development path, and the key milestones ahead.
Sure.
Great. So, David, could you briefly walk us through your background in mining and some of the key experiences that shaped you as an executive?
Sure. It's not very brief, but I'll give you some background. It starts with my father. He was a stockbroker in the 50s and 60s, and he was introduced to a wealthy Mexican man, and he invited him down to look for mines that closed around the time of the revolution in the early 1900s. And so my father was known as a mining financier back then. He had some success financing junior companies in Vancouver. And so he sent a geologist down there. They went and looked at a dozen projects, and the geo came back and liked Avino, and it was available. So we formed this partnership, and Avino Canada owned 49% because there was no NAFTA in the 1970. So foreign ownership can only be up to 49%. And then we rebuilt the mine in 1974 on the old foundations. It was a historic mine in the 1800s, owned by the British, listed on the London Stock Exchange, had a smelter there. But all of that was destroyed, and there was no mining there until we got involved in the 70s. Built the mine in 1974, and it ran for 27 years until 2001, and the first tech bubble in gold and silver went down. During that time, I was introduced to mining. I went down there probably I was young as 10 years old, and played around there and just observed. But when I became a teenager, my father sent me back there, and I worked in the mine. And I got to work in the lab and in the mill and just learn how things go there. And then in between school in the summers, I worked on the floor of the Vancouver Stock Exchange. I worked in the field of finance. I was about 20 years old when the crash in '87 happened, so I witnessed that firsthand and worked in the field of finance for a couple of years. Then I worked my way up into the offices, and then in the 1990s, my father invited me to come join him because he had his hands full. He had more than one mining company, so I joined him, doing investor relations, learning this side of the business. Became a director of Avino, and then in 2000s became an officer. I went to him after the crash or after the tech bubble in 2001. And I said, NAFTA's in place. Avino can have 100% ownership. We should go buy the other half of the mine. And it was closed. It was around 2002, 2003. So that's when I was appointed president. And I went there probably a dozen times to meet the family and their kids and offer them shares in the company. They wanted money, but we didn't have money. So we offered them shares. And in 2006, they agreed. We got 100% of the mine and we reassembled our technical team. I raised a bunch of money and we went around the property and did 30,000 meters of drilling and made a discovery. And then the global financial crisis happened in 2008. So we had enough money to revamp the mill and we got it back up and running in 2011. So here we are today. We have over 700 employees, busy company, but I'll turn it back to you to ask more questions.
Well, impressive story, and thank you for the introduction of you and your story, because management team is very important in the sector of mining. It's very capital intense, so enjoy that one.
Yes.
But you've been involved in the mining sector through different market cycles. So what are some important lessons that you've learned about building a mining company during both bull and bear markets?
Well, working for my father, you got to learn to be patient and not get paid very much for a long time. And sometimes during down markets, work for nothing because it's not an option. You got to keep the company alive. So I've operated like that. Be patient, discipline, with capital allocation, assemble a team. I've got a good team around me. We all think the same. I invite them, the managers, to many of our meetings, and they all have a voice. So they all feel important to the cause of making the company successful. And so we have a really good chemistry with our team. I think the shortest tenure here is about 8 years, but mostly everyone stays because they're treated well. And so a lot of them have done very well with their equity grants over the last year. So I didn't have to mandate people to come back to work. They're here before I get here. They're very excited to be here, and it's a great feeling.
Thank you very much for the insight there, and
Yeah.
sounds amazing to have workers before you.
Yeah.
So before we go deeper into Avino Silver, I'd like to just step back and talk about the broader silver market, because Avino is operating in a much larger macro and silver environment. So how do you view the silver market today, and what do you think are the most important forces driving silver over the next few years?
Well, I mean, people are just waking up now to being a critical metal. We've been saying that all along, and it's evident by the consumption. Demand is rising. There's a deficit every year. We've been in business with Samsung for 10 years. They're putting it in their products. They wanted to source the raw materials from an ethical source, and they did a lot of due diligence on the company. They sent teams of people to the mine. So that was a good endorsement. Yeah, and then now, you see these digital currencies and Tether, and so it's now being looked at as a financial instrument again. So there's both there, and so I don't see demand diminishing anytime soon. I think this is the new normal where we're at. We've got good margins. If metal prices stay where they are, we're happy. If they go higher, we're ecstatic.
Thank you very much. So, your silver view for the coming years, do you see prices rising even more than today? Currently, the silver prices are around 70 to 75 US dollars.
Well, if you look at the deficit in supply and demand, that would indicate, it's probably the deficits here to stay. I don't see the industry catching up. I mean, it takes so long to build a mine from initial discovery to, production, and a lot of mines are depleting. It's a depleting asset. So, but the beauty of the market right now is the companies that have capital discipline are putting it back into the operations and trying spending more money on exploration. So for us, we're doing what we wanted to do a long time ago. We didn't have the money, and so now we've got 4 drills turning. We got a fifth drill on the way. 30,000-meter program underway, both at Avino and La Preciosa. So we're very excited because, before it was just cash flow management, grade control, just trying to stay afloat. Now we're putting money back to where it deserves to be, and it's going back into the ground. So will all this money find more product than demand? I highly doubt it. I think it's not just for industrial use; it's a financial thing, and also it can be handed down without taxes. If you own coins and you give them to your kids, no one's going to know. So it's a good thing to have under the mattress.
Yeah, so the silver supply and demand deficit is a really interesting point. And so we have a 30-year underinvestment in the sector. Do you find that 30-year underinvestment in the sector will bring bigger problems in the sector coming forward? Or?
Absolutely. Every industry expert will tell you that. So it has to squeeze metal prices higher until the supply can catch up. And I don't know if and when that would ever happen. It takes so long to find mines, to build mines, and have the expertise. It's really complicated business. So it takes a lot. So I don't see supply catching up anytime soon.
Yeah, thank you very much for that. And I agree with you totally. And one other question. Silver miners right now, as Avino Silver, are experiencing record margins right now. How do you
Yeah.
see this sector evolve in the future? How healthy are you right now?
Well, we're very healthy with 140 million in working capital, capital discipline. Like I said, I think there will be some companies that make mistakes, but that's part of growing pains in the sector. But most of the companies today seem pretty disciplined, who's in production and building cash. And you don't see a lot of M&A. There's some people are putting it back into their operations. And so I think you'll be looking at more return of capital to shareholders through buybacks and dividends, and that should attract the masses that are maybe more involved in the broader markets. I think as dividends grow for the bigger companies, when they get comparable to everywhere else, you'll see more capital come into our space. So there's not like, it's a small market, so it doesn't take a lot to move the needle. And look at the sector, how far it's come in under 12 months. Everyone's doing much better, and let's hope the metal prices stay this way for the foreseeable future.
Yeah, thank you very much. And I totally agree with you because the companies are very healthy, but the broader market, you see the retail investors, they still focus on the AIs and the tech and companies and everything. And with S&P 500, Nasdaq reaching new all-time highs every other quarter, I don't blame the retails because their portfolios reach new all-time highs every other quarter. So there's no reason yet for them to actually invest in the scary markets of the precious
But
metals.
the tech relies on us. They're going to need
Yeah.
raw materials for those AI and server centers. And I know they want to go to space, but I mean, it consumes a lot. So
Yeah.
it's another market that's growing.
Yeah, exactly. I agree with you. I see the retails coming to the sector in the coming years. But firstly, it will probably come at a time when the S&P 500 doesn't reach new all-time highs every other quarter, because then they find a reason to, okay, we have to look at different sectors. What
Yeah,
sectors are the most healthy? It's gold and
yeah.
silver miners. So I think they will come.
We're starting to see that, at those conferences, younger people asking questions, trying to educate themselves. Your videos and interviews that are having on the internet. More people have access through the internet, so we're getting a turnover. We're seeing younger people inquire, but as for investing, I don't see. We haven't seen a wave of new investing. Maybe just a blip earlier this year in January, but we'll see. I expect that to continue. I mean, look at like, Goldman Sachs is still calling for gold to be at 5,600 by the end of the year. What does that say? I mean, they never talk about metals, like so it's a shift.
Me and Goldman Sachs has the same target.
Yeah,
So, Frederick, Avino Silver, you can go on with
Yeah, I
that.
like we must go back to the share price or the spot price, because when we met like in October and all the conferences there, then all the companies said only if we got $50 silver, then we are very healthy. And
yeah.
this whole other world right now to be working inside. So really interesting. And that brings us perfectly into Avino itself. Avino is not just exposed to the silver price, it also has a clear internal growth story. So could you give us an overview of Avino Silver today and in the coming
Sure.
years? And what type of investors do you think Avino is most suitable for?
Well, we've got a large retail base, 75, 78%, but it's shifting to institutions, the higher price, people that manage larger portfolios are coming in because they're seeing the margins we're creating. So it's a very exciting time to be out there and performing well. So when we acquired La Preciosa, it was at $15 silver, and we were just planning small scale mining because the government in Mexico wasn't really open to open pit mining. So, Coeur sold it to us. And so we were just going to haul the material over 19 kilometers away to the Avino mill, and we have independent circuits so we can change the feed that goes through whichever circuit we want. But now with all this money, we're looking at reimagining things. So we've brought in an engineering firm, and there's so many options because we have, we've got Avino, La Preciosa, the oxide tailings, underexplored areas. There's a lot of options that we have. So we're just doing trade-off studies right now. We're looking. We haven't changed our plan. We want to be between 8 and 10 million ounces in the medium term, but we're looking at possibly going bigger because we have this cash. But it's going to take us a little bit of time to go through those trade-off studies. In the meantime, we're generating cash flow from La Preciosa. So it's going to help fund whatever we do. We want to build the treasury as big as possible. So when we do decide to embark on an expansion, we'll have all the money.
Yeah, that's a good idea. And just for our listeners, there is a special situation in La Preciosa. Most of the market sees it as like and just you dig and you feed it both at the Avino's mine, but the big thing is here if you get permitted and accelerated up to like a big open pit. So
Yeah,
how is it like the permits or where are we today in the questionnaire?
just doing the trade-off studies, and then we have to go down that path. But in the meantime, we're just doing status quo as to what we had planned prior to the rally. So building cash. We came out with a maiden reserve estimate. So in this sector, you have to have a feasibility study or generate 90 million in revenue to qualify to publish reserves. So the feasibility study was done back in the 70s, so it's outdated. So under 43-101 rules, we reached that threshold. So we put out a new reserve estimate. So it's 127 million ounces of silver equivalent in the proven and probable category, and 300 million ounces in the measured and indicated category. And if you look at the overall tonnage, there's 67.7 million metric tons of M&I and 24.8 million tons of inferred. So 93 million tons. Our capacity in the mill does 750,000 tons on an annual basis. That's 123 years on a gross value. Now, I'm not saying you can get all those tons, but divide it in half, like it's still huge. And so this is why we're doing these trade-off studies. What can we do? What's the nearer term and longer term goals? So there might be like several paths that we take because we want to maximize what we can during the current metal price, but also look at something larger that has the best return on capital. So it's going to take a bit of while to get those studies in place.
Super, thank you. And no one need to be worried about the life of mine in this one.
No, because I mean at La Preciosa, I think, what did we put out? I think about 45 million tons. So we can put a decent sized mine there. I mean, off the back of an envelope, if we built another plant over there, 2,500 tons per day, that could produce 6 or 7 million ounces on an annual basis on its own. We didn't consider that before because we were just thinking we'll haul it to the mill. Now we've got this money. Now we can probably get a higher return on capital by considering a standalone mill over there. So this is one of the trade-off studies that we're looking at right now. But the current goal is to get between 8 and 10 million ounces in the medium term.
Yeah, you have the good economic cash position and no debt and everything like that. So it looks really good. But you also have like Avino Mine and Oxide Tailing. And how should investors think about these assets coming forward?
Well, yeah, I mean, we're moving them forward, but the trade-off study will trump everything. I mean, that will decide our path when we complete that. But in the meantime, we're doing community engagement for the oxide tailings. But if we build a standalone plant at La Preciosa, it'll have its own leaching plant over there. So we may not need to build an oxide tailing. Maybe something bigger over there is the way to go. But we need to understand what it's going to cost and what the trade-off is. That's what we're doing now. So I'm hoping to divulge this year, that type of information. It's just too early right now to speculate. So all I can say is look at what we've published, and that's our path at the moment. But we're dreaming bigger because we have a bigger treasury.
Yeah, thank you. And will be really interesting to see. And already when we spoke at the PDAC, you talked about these different paths that we can take forward. So looking forward to see where we go from there.
Yeah, there's a lot more high grade at La Preciosa. We published some drill results this year, like 7.9 meters of 1.6 kilograms of silver and 2 grams of gold. That's a big intercept for an underground deposit. 6.42 meters of 544 grams silver and half a gram gold. So our published resource has a dilution factor in there. But when we look at these individual results, that's what we're going to be mining. So it's somewhere between our published resource grade and this. So it's up, not down. So we're very excited. The market's excited. Once we get in there, we've got one portal in. We've got brand new equipment in there. We're looking at permitting to get more adits in to go faster and harder at the mining to get at these high grade areas, because that's huge margin, those type of grades.
And when we're already talking about the exploration, could you tell us a little bit more about the upside? You have a strong exploration program forward. Can you
Oh
talk a
yeah,
bit more about it?
We're doing minimum 15,000 meters at La Preciosa, 15 at Avino. We verify technology. They have this AI software called Dora. So we put 50 years of data in there, and it analyzed it all, and it's given us a lot of targets that are not obvious. And so you need geologists to review it and test some of the theories, but we're very excited. We're testing some of the targets. What else can I tell you? We're ramping up at La Preciosa to 500 tons per day, so that's happening. But yeah, I mean, we've ordered another drill. We're building up our geological department. Training is the slow thing is training up the workforce, because we're trying not to bring people from out of state or out of country, to keep the morale up in those villages. So if we can train them, but it takes time. Sandvik delivered a simulator. Caterpillar had a simulator there, so we're training them on the latest equipment, and building our geological department. So, 30,000 meters this year, maybe we go much more next year. I'm not sure. Depends on what they can handle.
Yeah, yeah. Thank you. And everyone always curious when you have such a big bag of money, and then it's like all the focus right now to get an organic growth, or you even looking for like an acquisition or something?
No, not until we understand the expansion costs. So until we know, we're not going to we were using discipline approach. In the past, the mistakes made by mining companies is grabbing too many assets and then not having enough money to manage them. And then the market goes soft, and then they have to issue shares and dilute shareholders to survive. We've learned from that. We're staying disciplined. We see a clear path, as we say in our tagline, to transformational growth. We don't see that we need to make an acquisition at this time. Our price to net asset value is 1. If we were at 2 or 3, then we'd have equity leverage, and maybe we would look at, we'd have a premium in the market. Then maybe we would look for something. But anything that's available is not going to be a simple operation. It's going to be something that has problems, that needs to be fixed. And we've prided ourselves on being a low-cost operator. Our all-in sustaining cost per ton is $90. If you start taking on other projects, you got to build a middle management team to manage both operations. That's going to raise your prices and squeeze margins. We're just trying to maintain discipline at this time until we get those trade-off studies and understand how big we could grow with what we have. I mean, 93 million metric tons is a lot. Yeah, so that's where we're at.
And I'm with you there. I think you have the assets, you have the opportunity here to growth organic by yourself, and do it with a little bit patience, but so much better economic than make like acquisitions right now. Everyone is that are for selling is probably too high prices and need maintenance and a lot of investing to get to production. So
yeah, and they're going to have to take on risk, capital, debt, hedging. We're unhedged. We were able to tap the market in January. Our silver price that we averaged was $86. I think we beat a lot of our peers just because we have flexibility dealing with Samsung. We can call them up and say, okay, lock it in at today's price.
yeah, that's magnificent. And if you're looking forward like 12, 24 months, what do you think are the most important milestones investors should have with there now?
Well, building our balance sheet, cash flow generation, exploration results, and then once we have more information on a step change on our growth strategy, we'll let everyone know. We're just not there yet because we have so many options. There's unexplored areas that need to be explored to be considered into the optimization plan. So more drilling is required. Like we moved to drill over to this Guadalupe area. Guadalupe, we've drilled it on and off over 10 years, and then when we didn't have money, we stopped drilling. So we've gone back there, we're filling it up. It's a good area. It's parallel to Avino, and we can put an underground haulage tunnel over there and mine it. So this is an obvious area of brownfields that we have to infill drill, and a lot of the drilling that we didn't get included in the latest reserve estimate because the cutoff date was October and November. So the next one's going to be even better. So we're excited about that. So stay tuned and watch for, drill results and, our financials and as we, build our treasury.
Lovely. You're full of surprises, David. Like that. And thank you very much. We love the Avino case so good right now. So thank you.
Thank you.
David, thank you very much for joining us today at the ML podcast. So we really appreciated your time to join on the podcast, and as long-time shareholders, we like to continue follow the company closely and look forward to see how the next phase growth unfolds. Hopefully we see you again soon.
Thank you very much. Have a great day.